Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 6th of December. Yesterday, we got ISM non-manufacturing PMI and we got 3 points more than expected. Market sold off at 10 a.m. Then we recovered a little bit, but we ended the day big in the red due to fears of high yields, interest rates, recession. There's a combination of a lot of fear in the markets. And economic data is not helping to change that. We also had composite and services PMI that were as expected, but the non-manufacturing PMI 3 points higher, and also the non-manufacturing business activity 10 points higher than expected, 64.7. So today, Tuesday, December 6th, we don't have any big economic data. We have the balance of trade for October. I don't trade this news, and I don't think this might affect the markets. So I think we can expect some continuations on fears, and I don't know. I think markets are right now waiting for some news to trying to hold these levels. If we check the 2-hour time frame, we got these two. We got on 15th of November, at mid-November, we started this breakout higher, but Thanksgiving, I think, cooled down the market a lot. Then we had this Powell speech, and we hit that same resistance, 12,140. And right now we are again stepping down, trying to hold the 200 EMA in the 2-hour chart, trying to hold some averages. And I think markets need some positive news, because if we don't get some economic data push next week for CPI, I don't know if we were down here again holding as we did at early November. We were holding these levels again on Powell. We were at those levels, and these weeks, this support at 11,550 is super important. If we break those, we might see, this is the CPI move, we might see Nasdaq pulling back to 11,200, or I think 11,000 and 10,800 levels. We can see a big pullback if we don't hold this 11,500. And another thing that we have to watch out is that SPX, let's change to the SPX. As you can see, let's change. SPX is right at resistance. So I was uploading some YouTube shorts last week, and I've been following this trend line. We pushed the 200 EMA and SMA, and we just hit again, 4th time this year, we hit this descending trend line that we are fighting for the entire year 2022. So be careful here, because the second take on the trend line, we got a lot of momentum. The third one, a lot of momentum, but right now we are slowly building up to there. That's some positive news for the bulls, because it's not the same pushing on momentum than pushing slowly. This shows accumulation, and I think big players are trying to break also this trend line. The only thing that we are missing is positive news and economic data that pushes this breakout. This is the most important breakout of the year. I told you in a YouTube short that this is super important. If we finish the year breaking this, oh boy, this is game on. But again, We need economic data. We need some positive news. Right now, dollar is trying to reclaim the 200 EMA. Let me change again to my layout. So right now, dollar, the 2 hour, is trying to reclaim this 200. It's showing some strength, some consolidation, and is trying to reclaim 106. Yields are also bouncing, as you can see, big bounce, stepping up, and the 2-year yields, this is the 2-year yields, is trying to reclaim 4.5, these levels. So watch out, because 10-year and 2-year are showing some strength, and we might see markets selling off due to this. The 10-year is also seeing consolidations at 3.6. And remember, the inverted yield curves. This is super important. We are going deeper and deeper. This is, let me show you the watermark. This is the 2-year, the 10-year. 10-year is controlled by the Feds versus the 2-year controlled by the markets. So right now, this is super deep in the red, minus 0.8%. There's another one investors are watching that is now inverted since mid-November. The 10-year versus the 3-month short-term. Look at this. If we open our view, you can see that this is, this is not good. Look at this. This is the dip that we had for on the pandemic. Now we are seeing this dip. This is not good. This is not something you want to see. Something is very, very sick on the economy. And finally, the 2-year versus the 3 months, this is the more volatile one, the shorter term, is now starting to see the inversion. This is super bad. All yields, most of them are inverted, and this is, I think, big players and participants are watching this, and they have a lot of fear. That's why we are seeing this kind of movements on the yields. That is affecting the markets for sure. And this is something that Fed is fighting. Fed wants the economy to cool down, to have some sort of small recession, to fight and to end the inflation in the midterm. So this is something that is being pushed. Feds are increasing interest rate hikes. They want labor market, housing market. They want every part of the economy to retrace and to show weakness. And the consequence of that is those kind of inversions and maybe treasury bonds. As you can see, this is TLT. The 20-year treasury bonds are pushing higher. This is the consequence. People is looking for bonds and less risk investments. And if you check XLY, consumer discretionary, 1/3 of US economy is showing a lot of weakness. We need consumer discretionary to go up for markets to start pushing higher. So energy, look at this. This rejection again of higher pricing, 85 was rejected, and right now looking for new lows. Crude oil is looking bad, and natural gas also. Look at this. Demand destruction. If we check the sector fund, the XLE, you can see that energy is also being hit by demand by the Feds. This is indirect heat by the Feds because demand is being distracted. People is not willing to pay this amount of prices for energy, for crude oil, for natural gas. So at the end of the day, the sector fund gets hit, and right now we can see a move way, way lower. So the economy is being hit hard. This is the goal of the Fed. So don't panic. Just be patient for the markets to recover, to inflation to go down, and then we can push together to the upside. What kind of levels I'm watching today and what kind we already reviewed that this 11,500 on the Nasdaq is super important, and we don't have any economic data today. So I'm expecting some sort of maybe continuation or maybe a push higher, but I don't think we are pushing higher. And if we do that, I think it's a fake move, and that move may find sellers. So my expectations are to go down slowly or being rejected from the top for a stop hand, for bulls to jump in and smash it hard for, I think, 11,550. It's a good level for the rest of the week, and starting next week for CPI. Maybe we can consolidate, but for sure, I'm very soon today. I will be looking for strength, to sell strength, and to find weakness overall. So that's my plan for today. I think that's the logical approach because, as I was saying, we don't have any economic data. Some indicators, some other parts of the economy are showing weakness, are showing fear, and I think that's going to be reflected on the markets. So that's all for today. Thank you for your time. If you have any questions, you can comment down below and I will try to respond to all of you. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. This will help a lot to the channel to grow. I'm putting a lot of effort, so please stay tuned, follow the channel, and I will provide you with the best information that I have available. Remember, I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time and see you in a couple of hours with a market update. Remember, discipline and risk management are key for success. Stay safe, everyone.